Hello everyone, happy Sunday. Welcome back. Happy Sunday. Audio's good. Glad to be here with you guys. We do have Thanksgiving week coming up, so touch on the economic calendar, and then we'll get into the usual business with the weekly outlook. Take some questions you guys have. Going into intermarket analysis, looking at dollar, bonds, equities, and we'll take a look at some other markets as well. Huge volatility in the markets, lots of opportunity coming up as a result of that. So you definitely want to be on the right side, know what to look for. Also know how to be flexible and pivot just in case the market is going to go against your initial expectation. And I'll cover what all that would be for me in terms of targets I'm looking for and validation and what we're going to be looking at here this week. Paul, what's going on, brother? Glad to have you. It's good catching up this weekend. Hey, Joe. Happy Sunday to you, sir. Glad to be here. All right, guys, let's go ahead and get into it here. We're going to start with the US dollar, which again, for those of you guys that may be new, everything is going to flow from the dollar and the bond market. So the bonds and the dollar is going to give you direction in whatever other asset class you may be trading. If you're trading Forex, you have to know where the dollar is going. If you're trading indices, you don't have to, especially if you're a scalper, but it definitely raises the probabilities of your trades if you understand what the dollar is going to do as it relates to equities here. So let's go ahead and get into it. Let's start from the monthly chart here. So I'm just going to do a short recap of what we've been looking for the last 2-3 months. It's been the same thing. It hasn't changed. Macro analysis doesn't change every few days, right? It's pretty consistent until we get a significant breakdown in the market structure, which we have not seen, and we're still seeing clear bullish order flow top down. So let's go and get into it. We dropped down into a discount of this range. You may be asking what range. Let me review that here real quick. This low, this high, that's their dealing range. And you can already picture equilibrium, or 50% of that range is going to be about here. Right, so they dropped it down into this bullish order block that we were watching. Initially, we had that order block as a target, right? We were looking for that as a downside objective. Why? Because if you measure the range here, go into it here, you see the 0.75 level, how it also overlaps with that down close candle. That's the PD array I'm going to pick. So we drop down into it, we stay in the upper half, and we see discount sensitivity from this level, meaning we're hitting it, sharp rejection, right? So it's hitting the level, immediately giving feedback that it's bullish off that level, as seen by a raid, a stops under this low, and then a strong displacement back to the upside. So that's why that bullish order block was influential, because it's in a discount of this range that we're in here. And that's why we have been bullish US dollar. In addition to, there were other factors that allowed us to see this turning point here, one of which was seasonal tendency, and then the other one was the commitment of traders. The commercials, as it was diving into a discount, were building in insane amounts of long positions. And then when you align fundamentals and technicals, it is a beautiful tapestry. So as it relates to the monthly chart in terms of upside targets, we had this little monthly high here. We dug into that now. I'm looking for this monthly imbalance here. So that's my initial upside target on the monthly chart. Then how we trade there, right? If we start to see a lot of speed through it, then we'd look for the imbalance just above that, and then we'd worry about this high if and when we get there. So that's what we're worrying about as of right now, but that still is going to give you plenty of anticipation as it relates to the next couple months at least, unless we just start getting a crazy rally, which who knows, in this climate anything can happen. All right, so dropping down to our weekly chart here. Again, I still have this blue shaded rectangle, which is that bullish order block we're looking at on the monthly chart, and then you want to look at how the market trades inside your higher time frame PD arrays in the lower time frame, because you want to see very specific things. They don't turn the market in a lot of unique ways. So you just have a couple ways to do it. One of which is a stop raid and then a rejection. So if the monthly order block is a point of interest for you, and I'm not saying the weekly chart is a lower time frame, but in reference to the monthly chart, the weekly and daily is a lower time frame than that. So what do we do inside a key level that's in a discount when commercials are building long positions? And if you want to know more about that, Tommy actually covers that in the weekly outlook. So in the newsletter that you guys get every Sunday, all that was covered and forecasted plenty ahead of time as these candles were actually printing. So you guys can also refer to that for your edification. Looking at the weekly chart though, so we dropped down, sell stops cleared inside that range, and then we displaced to the upside. We watched this down close candle. Here's the bullish order block. We hit it, rallied. And then I wasn't live with you guys last week, but the cool thing is we didn't need to be, because what we were looking at from the week before that was the same thing. So what we were watching here was this weekly imbalance here. This one I have shaded in blue. What I wanted to see is how we traded there, right? Because simply put, if you've watched my institutional order flow video on YouTube, and that's just a foundation, introduction to institutional order flow, but simply put, down close candles and gaps should support price. Are we saying that? Absolutely. So nothing is bearish in this market. So we drop down into that daily imbalance, or sorry, weekly imbalance. And let me put the arrow so you can see it. The bodies, you see how they stop right there at the midpoint? That's algorithmic. That's the market indicating that it's not willing to offer a price below that, and the market is staying in the upper half. When you see that, that is indicating algorithmic strength. So that's what we mean when you're looking at order flow, you're watching it candle by candle. And the same thing that I'm doing here on a weekly chart, I'm doing on 1 minute charts when I'm trading, right? I want to see favorable signatures that tell me the market's in my favor, or if it collapses through that, then we're probably going to put the bullish bias on the back burner. So you see, it gives you that flexibility, knowing what you're looking for. So weekly fair value gap here, nice support there in the bodies. And then no surprise that we took out a higher high, and we'll cover that here in the lower time frame. There we go. So high taken here from that weekly fair value gap. So from the fair value gap to the high, nice little price run there on the daily and the hourly chart. Going into the new week, going into the next couple weeks, if we see acceleration above that high, which is what I'm favoring, nothing as of right now is telling me we're going to see weakness in dollar. So if we start to see acceleration above, let me take this off here. Acceleration above this high here is going to take us into this wick. The levels I'm focused on inside this wick is going to be the highest close, which should be treated like a rejection block. And then through that, we have the midpoint of that wick. And those just give me low-hanging fruit targets in case we don't get to this high here, right? Because if we're going to run from here to here, that's still plenty of range to work with, and you don't need the high here. So I favor all three of these levels delivering: the low, the wick, the midpoint of the wick, and the high. But just in case we don't, those are targets that I will be using going into the next couple weeks. Through that, we have this last up close candle here, which is a level of interest for me. And just to review why that has been a level of interest for me the last, say, month or so, is because it also overlaps with 50%. So if we're going to retrace back into the range, it's reasonable to see it want to drive up to equilibrium, or 50% of the price range from high to low. So you have to calibrate the dealing range on the time frame you're trading on, right? Meaning, you see how the monthly range is, or sorry, the weekly range that we're looking at now is different than the monthly range. The monthly range is this low to this high. So as you're refining and doing your analysis, you're zooming into the time frames, and you have to work with what that time frame is giving you. So if you're new to these concepts, you may be confused, thinking, well, now why is he measuring this range if he just measured the monthly range here? You measure the range of the time frame you're analyzing at the time. And then the key is the market needs to flow top down. So I'm bullish based off the monthly dealing range. And now on the weekly chart, I'm refining it down, and I'm now further bullish on the weekly chart using this range here. So it's not a matter of complication. It's a matter of just analyzing the time frame you're looking at and looking at it in a top-down perspective. So looking at that here, these are upside targets, and then this up close candle here before the big drop, I'd like that as an upside objective, also overlapping with that 0.5 level here. So just doing a kind of recap of what I've already covered for the last month or so, but just want to give you guys, again, full perspective going into the end of the year, and potentially this analysis could carry on into 26. All right, daily chart, finally. So as a recap, we dropped down, we cleared the low here inside that monthly key level, displacement higher, imbalance, hit it, support, imbalance, hits it, rockets higher. Now looking at this range here that we were trading in the last week, we dropped down, and now we're going to measure the range on the daily chart, right, which is this low to this high here. We dropped down into a discount market, more specifically this bullish breaker. That's why I was saying last week I didn't even really need to go live because we were watching that breaker the week before last, and how we traded there was instrumental. And then if you look at how we traded there, midpoint, body staying in the upper half, using it as support, indicating obviously this market is bullish. So they were just doing what? Dropping it into a discount, accumulate more long positions, keep sending this thing higher. So we'll take these levels off because they're not in focus here this coming week, but just kind of want to recap what the previous week did, because that's what's going to set you up for the coming week. All right, so looking at the daily chart here, focus for this week, we're still seeing bullish institutional order flow. Unless we lose this gap here, everything, at least at the moment, is pointing north. We're looking bullish, looking higher for dollar. What I'd like to see is the market not dip into the lower half of this daily gap. Reason being is because there's also a inversion fair value gap here. So on the other side of the curve, you can see we have that here. So whenever you have the case where there's two fair value gaps overlapping like this, you don't want to see it drop down into it. So you see the bodies here. So we're staying above this inversion gap here. I'd like to see that continue and just see the market continue working higher. We have this high here to worry about. And then as we start to make some ground above that, then again, we have that gray rectangle, which again, remember, is that monthly gap here. It's on that monthly chart. So daily chart, again, as long as we remain above that gap on bullish, preferably we want to see it stay in the upper half. If we collapse down through the gap, then that obviously will change things in my analysis, and then I would be probably neutral to bearish. And then actually, let me touch on one more thing as well. So when I give you a level to watch, right, like a breaker, right, we're looking at that the last, not the last week, but the week before that. You see how we created a swing low inside that breaker? That's bullish. That's your buy signal. Swing low inside a key level when you're bullish. Drop down to your lower time frame, buy it, ride it up. Obviously, I know we're not trading dollar, but you would just look for shorts in euro and pound, and you're going to see they work beautifully going short Monday, Tuesday, riding it down into its respective lows. Hey, Samurai, I'm doing good, sir. Hope you're doing fantastic. All right, so hourly chart here. Let's get through this. So we already worked lower here into that daily gap, as you can see here. And then we're starting to see the market respect that inversion gap. So I'll take that off now. So from here, I'd like to see the market continue higher. Do keep in mind, we do have a bank holiday this week, Thanksgiving in the United States. So that will be a big factor in price delivery this week. In my opinion, best trading is going to be Monday through Wednesday. Thursday and Friday will probably be lower volume. Will probably not be as clean. Will there be price runs? Can you scalp it? Absolutely, if you have the skill set to do so. But in terms of sustained, high probability, one-sided directional price runs, just not as likely to see that on the other side of Wednesday going into this week. So also do be mindful of the economic calendar, because many times what you'll notice is weeks that have a bank holiday in them can tend to be time distortion or consolidation. Now, given the current climate that we're in and what we're seeing in price action right now, I'm not calling for consolidation, but just be mindful that that can be a factor. Traditionally, that's what I would go into. My protocols would be huge bank holiday. A lot of traders are going to be taken off, especially after Monday, Tuesday. So I'm not really looking to push it that hard. However, given the level of volatility that we're seeing, tremendous opportunity just about every single day. So some things to keep in mind going into the new week. So moving right along, we'll look at euro and pound here just while we're on the topic here. Stellar price run lower in pound down to those equal lows we were looking for here. Here, relative equal lows. If you guys remember, we called this S&T here. You may be wondering what that S&T is occurring between, and it is the euro pound. So again, before you start thinking that S&T is the big secret, holy grail, it's not. It's the fact that the dollar was reversing and going higher. And then when you have this as an additional confirmation, it just makes it even stronger. So S&T, but it also tells you relative strength analysis, right? So look at the euro delivery versus the pound here. Share some things for you guys with Forex, but also for equity traders or indices. This is relative strength analysis. So this applies to every market. Pound failed to make a higher high here. That's why I'm favoring shorts in pound over euro. And if you see, euro didn't get down to its respective low here. Pound way over delivered on the downside. And that's because it indicated it was weaker, failing to make that higher high. So if you want to get the most bang for your buck, short the right market, relative strength analysis is key. But even if you would have shorted euro, you still would have made some bank, right? So there's nothing wrong with shorting euro. It's just a matter of if you want to trade the better market that's going to run a lot more for you, look at the difference in the delivery in pound versus the euro, right? Pound in a hurry to get down to its lows. So if you're in those trades, it's going to run a lot faster to your targets as opposed to the euro. Another indication that the pound is weaker, I'll just throw this in there as well, is the euro pound. So the cross between euro pound, let's go up to the weekly charts, show the point here. We're seeing what on the weekly chart for euro pound? Bullish order flow. So if euro's first in the name, right, and it's bullish, euro is going to be stronger over the pound. So if you're going short, you want to short the weaker market, not the stronger market. So additional indication there. All right, moving right along, let's go into the bond market. Not much to say on bonds. Bonds have just been super sloppy. And yeah, we just need the weekly chart to communicate this point here. But we'll go up to the monthly. So longer term bonds are just in this sloppy, choppy, nasty consolidation. We're finding it down to the weekly chart here. I wanted to see how we traded inside that weekly fair value gap, but now we're starting to just consolidate here. So not a lot to share on the bond market. I wanted to see how we traded specifically inside this daily gap here. And we hit it. We started to break down, but then we just pulled right back into the range, signaling, again, we're still in a broader consolidation. So as of right now, bonds don't have a lot of weight in my analysis when they're being held and when they're consolidating. So not much to share on the bond market other than if you're trading it, it's a scalper's market. All right, moving right along. indices. Let's just keep that on the daily chart here. All right, so we'll go up to the monthly here. All right, so monthly chart, we're seeing some weakness here on the monthly. These two wicks, we just dropped down into them. If we lose them, my attention is going to jump right down to this monthly fair value gap here. So that's what I'm favoring as of right now. I dropped down into this monthly bullish fair value gap here. Looking at the weekly chart here, we finally broke down through this bullish order block. That's what I was waiting for in terms of when I can finally feel confident to call and not that I'm calling a top and it's never going to go higher, but framing an intermediate term high in price action. Because if you see, we'll go to the continuous contract here. Bullish order flow has been strong on the weekly chart, but now that we're losing a down close candle, that is significant and potentially indicative of a larger turning of the tide. And you see, as long as down close candles and fair value gaps and supporting price, indices have been bullish. But now that we've seen this bullish order block taken out, that is no longer supporting bullishness. So dropping, we'll go back to the delivery contract here. So looking at the weekly chart here, we broke down through this bullish order block, which now I'm watching to see if it wants to be a potential bearish breaker. So essentially, use this resistance to send price lower. Where to? These lows here. So these lows here are relatively equal. Now that we're breaking down through this down close here, as long as we stay below it, my attention is on sell side here. So sell side's the draw as long as we remain below this down close candle on the weekly chart. This gap we had on the weekly, if you guys recall, this week here, we were looking for the market to draw down into it. And then I went to study how we traded there. We then closed below it, hit it, respected it, sold off, things that were indicating weakness. All right, looking at the daily chart here, I was bearish last week, except on Thursday. Thursday, I had to see how they traded inside this gap, and I'll cover that here in a moment. But we're seeing clear bearish order flow here. More specifically, if you guys remember where we left off a couple weeks ago, we were watching this gap here, and how we traded there was going to be instrumental longer term, right? Because if it was going to be bullish, then we would get above the gap, use it as support, and rally. But the fact that the body stopped and it couldn't get above it, and then we broke down through it with a fair value gap, that's telling you it's weak. And then when we hit it on Monday, couldn't get into the upper half of the daily fair value gap, that's just easy lower prices. Low here, taken out, low here, and then they took it down into this sell side here. Because again, the fund level stops are going to be here. So anyone that's long, their sell stop's going to be below the lows. You may be asking, well, who's trading like that? Funds. Swing traders as well, but more specifically, long-term trend following fund models. So looking at this here, the reason I was having to see how we traded on Thursday was because we dropped down on Thursday, we cleared this low, and we cleared this low here. I wanted to see how we traded inside this imbalance here. And then what did the market end up doing? It hit the low of the imbalance and shot lower, right? Strong rejection from this imbalance here, indicating we're seeing what that sensitivity from these premium levels, and that's what then allowed me to get back in sync looking for lower prices. Going into the new week now, based off all that, I'm watching this up close candle here. If we're going to sell off on the daily chart down to these equal lows here, which is what I'm favoring right now, especially if we continue seeing strength in dollar. Remember what we talked about with dollar just about all year. We have been seeing, for a period, indices go higher with the dollar. Whenever you see that, it doesn't just mean go short indices because they can just keep sending it higher. But it is indicating that indices could be having a suspect rally, meaning that the rally you're seeing in indices is one you might want to fade because it might turn. Because eventually, a stronger dollar will cause the stock market to bend the knee and trade lower. So what I'm watching here is this up close candle, bearish order block. If we're going to go lower, we have no business trading above this up close candle. So I'm watching that level. It's a key level. We traded up into it on Friday. It gave me a nice little short setup in the PM session, which I actually reviewed in the Discord, in the free Discord, by the way, for those of you guys that want my pre-market analysis where I'm sharing what levels I'm looking for and sometimes following up with market reviews. Go ahead and check out the free Discord. If you want to learn this skill set, that's what you have to do. You have to see the market mechanics presented in front of you. You have to log it. You have to see it. And over time of doing that, you will acquire the skill to find your own liquidity, to find your own trade setups. And at the end of the day, that's what you guys all truly want. And the way you acquire that skill is you have to roll up your sleeves, annotate your charts, and work with somebody who is able to show you what the market is likely to do more often than not. And then from there, you can acquire a transferable skill set. So looking at this bearish order block here, I want to see us stay below it, preferably in the lower half. I like how we hit it on Friday, and then it gave us some nice sensitivity here to the downside, but I want to see it stay in the lower half here. So we hit lower quadrant, that's fine, and I want to see this thing really start to work lower if we're going to be bearish, because these equal lows here, very juicy. And now that order flow's weak, they're going to be in a hurry to gun for these lows down here, if that's going to be the case. Through those lows here, then we have that monthly imbalance here. What changes my analysis is if we trade through this up close candle. So if we trade through this up close here and get above this wick here, then I'm neutral to potentially bullish at that point, but we'll weigh that out if and when we get to that point. Also, to keep in mind, same things I touched on dollar. We're going to have an abbreviated week this week because we do have the Thanksgiving holiday on Thursday. So do keep that in mind. All right, looking at the, we'll just drop down to the 4 hour. All right, so 4 hour chart on Friday, we traded back up into this range here. What I'm watching is this 4 hour gap here. I want to see this gap here be a breakaway. I don't want to see us get in the upper half of this gap. I want to see that daily bearish order block level that we traded up into here, and we've already hit that gap. I don't want to see it come back up into the upper 50%. It wouldn't make me bullish, or it wouldn't just throw the whole bearish bias out the window. But if we're going to see a strong, fast price run down into these lows here, I don't want to see it get into the upper half of this gap. I want to see it show extreme weakness and just keep rolling over. And then hourly chart, we'll just refine that a bit more. You see we traded higher into that daily bearish order block. Let me go taking that up for you guys. You guys can see that here. So this black line, that's that daily order block. See, we hit that on the hourly chart and start to break down here. So we can trade into this hourly gap here, but like I said, I prefer this one, or at the 4 hour chart, but at a minimum, I want to see this hourly gap here treated as a breakaway, which essentially means not filled all the way. So I don't want to see it trade to the high of that gap. That would not be bullish for me, because if we get up to the high of that fair value gap, then I'm taking these highs here into consideration for it to want to trade up into that for the buy stops there. So that's what I'm watching. This key level is going to be key. More specifically, though, watching the daily bearish order block here. Hey, Money. Good Sunday to you, man. All right, guys. And then we'll go to Bitcoin. Lower prices on Bitcoin. No surprise here to us. You guys recall way back here, we were covering that the Bitcoin saw a 2022 model. For those of you guys that may not be well versed in ICT, the 2022 model is a reversal pattern. Right, so the 2022 model, and not to steal the thunder from that if you want to watch it, obviously look it up on his YouTube to get the full breakdown of it. But looking at this here, the market drove higher, cleared buy stops, cleared buy stops here, right? And then an aggressive breakdown taking out this low. So this fair value gap here was key. Why? Because it happened after we took the buy stops here. And then what did we do? Hit it, sold off, hit it, cleared the stops above this high, and then sold off again. So whenever you frame a 2022 model, that's a reversal pattern. Reversal means it's going to change direction. What's it been doing? Going higher. What's it going to do? Go lower. So hopefully you guys protected your crypto bags. Bearish order flow as well. I mean, very easy to see it once you have the eye for it. Up close candles, imbalances, all sending price lower. So pretty straightforward stuff there. Let's go up to the higher time frame though, now that we've kind of covered what we saw here. This low here, well, we did get down into the body here. So that's also an interesting level here. So we did get down into the lowest body here. What I want to see is, do we keep selling off? If we do, then we could get down into 74s. Looking at the weekly chart here, so far nothing bullish in the cryptocurrency market just yet. Watch this weekly fair value gap here. Nothing changes for me in Bitcoin or cryptocurrency until we get above this gap here. If we get above this inversion fair value gap here, then we could potentially consider either a deeper retracement or an all-out reversal, but as of right now, I don't think that's in the cards. We saw a 3-drive pattern here in a premium, which what that is them distributing their long positions, right? Because retail is trying to do what? Buy above the old highs, right? Blue sky breakout. So they're going to buy the breakout here, buy the breakout here. And who's selling at these expensive prices? If you've learned anything about how market makers and how liquidity providers trade, you would understand that they're selling into this rally, selling into this rally, selling into this rally. While everybody's saying 1 million Bitcoin, crypto President Trump, right, going to take this thing higher. Well, see how that works. So there's the market efficiency paradigm 101. So Smart money's offloading their bags. Retail rich chasing price buying all-time highs, which, it's unfortunate. So looking at this here, we saw a 3 drives pattern, which the pattern in and of itself, you see how I broke down the pattern. It's not the pattern that matters, because you could even say, look, here's a 3 drives pattern as well, right? High, high, and then it makes another higher high here, but it's still bullish at this point. So that's not a pattern to go short off of. But then when you have all this other context here, then it's going to break down. Then the 3 drives pattern becomes logical because of what's happening at those highs. It's just running out the stops, dragging in new breakout artists to go long just to rake them across the close. So looking at this here, we have this inversion fair value gap. As long as you remain below that, I think we could still see Bitcoin down to 74s. And then if we start to accelerate through 74s, then we could have a date down here with the 50s, but we'll worry about that when we get there. As of right now, though, it's heavy, it's bearish, seeing a lot of speed below this low, which all things indicating bearishness. Daily chart, watch this weekly inversion gap that we extended through. We have a small gap here, so it'd be interesting to see the market hit that gap and see if it wants to continue rotating to the downside. So there's cryptocurrency, Ethereum just getting slaughtered as well, and then we also covered that S&P. The annotation is still here from when we did that live. So Ethereum made a lower high here. So like you guys see, we had a macro reversal in the markets, but look at what constituted that, right? You see when cryptocurrency is showing a cracking correlation that it's going to rotate lower. But look at what time that's happening. When the US dollar is also rotating and making a low. These markets aren't random. That's why I look at all these different asset classes. And then it just took indices a little while to get in sync with lower prices. So it just took a bit longer to rotate lower. But you see everything is going to follow intermarket analysis. So from a fundamental standpoint, yeah, I'll give you that. This is absolutely fundamentals. Understanding currency and how they're going to move. So you see this SMT was seen in euro, was seen in pound, and was seen in the dollar. So what's that indicating if dollar's bullish? Risk off, which means money is going to come out of risk assets, cryptocurrency, stocks, and that's why we're seeing pressure on it. And then that SMT here with Bitcoin, just the nail in the coffin. And from the highs, I mean, we've dropped what on Ethereum? Yeah, about a 47% haircut. That's a decent cut to the portfolio if we're not hedging correctly. So crypto traders, things you guys want to be mindful of here. Is money making shit regardless of the asset you're trading? Stocks, cryptocurrency, foreign currency themselves. It's all making money if you know what you're doing. All right, guys. So that's it here for me. Any questions? Any markets you guys want me to look at? Maybe take a couple questions here. I do got some things to take care of today. What do you guys got for me here this Sunday? Samurai, I'm doing fantastic, sir. Enjoying my Sunday. Got a nice pump in here before the live stream. Enjoying my weekend. Hope you're doing the same, sir. Pleasure, Paul. Have a great week, brother. We'll be back to business here tomorrow. It was great catching up with you. Aslam, doing fantastic, brother. Another day above ground is always a good day. How about yourself? Yes, sir. Awesome session. Looking forward to what comes next. Absolutely, man. Lots of opportunity. See you and have a great rest of your week. Will do, Paul. We're dialed in. See you next week, brother. Thanks, Phil. Enjoy the rest of your weekend. Happy Thanksgiving. You as well, Joe. All right, guys. Looks like we're all studied up here. Hope this one was insightful. I will see you guys on the next one, and we'll speak soon. Bye, everybody.